Hi friends, my name is Rahul Jain and I am a SEBI registered research analyst. In this video, we are going to talk about mutual funds crash. Yes, a lot of mutual funds are right now crashing because overall market conditions are not great at all. In fact, overall, if you look at the broader indices, there is a lot of pressure on the markets when I am recording this video on 9th of March. In this video, I'm going to present to you category wise, let's say large cap, mid cap, small cap, which mutual funds are crashing a lot. And the intent of this video is not to tell you that you go and buy these mutual funds or sell these mutual funds. Absolutely not. My intent is to present to you insights, and what you do with that insight is up to you. Because there are investors who believe that if mutual funds are crashing, they might want to accumulate or buy the dip. On the other hand, there are investors who say that, you know what, if a mutual fund is falling more than the benchmark in these periods, it means it's a bad mutual fund. So it is up to you which camp you fall into. That I cannot recommend whether you go buy or sell these mutual funds. But insight wise, I can guarantee that if you watch this video without skipping, you are going to learn a lot about what is happening in the mutual funds right now. With that, let's get this video started. I'm going to start with small cap category first. Okay, so what you see on my screen is a lot of small cap mutual funds. None of these are recommendations. And what I've done is I have looked at their 52-week, matlab last 1 year's highest NAV, net asset value. Okay, I'll show you an example as well. And then from that highest peak, how much these mutual funds have fallen by. And the mutual funds that have fallen by the most, right, in terms of percentage, I've put them on top. So number one is Tata Small Cap Direct Growth Mutual Fund. It has fallen by around 21.23% from its 52-week highest peak, okay, which was made on 17th of July 2025. Let me show you with the data, okay. So if I go to Tata Small Cap Mutual Fund's website and if you look at the NAV data here, okay. So for example here, this was the peak, okay. This was on 17th of July, 47.36. What is the current NAV? Current NAV is 37.30, right? Now you can do the math. It is down by almost 21% in the last 1 year. Okay. How about if you look at the last 3 years? Was there a better peak or a higher peak? Yes. So this was the peak that we just looked at, 17th of July 2025. Okay. And if you go back previously, October 2024, if you remember when the small cap started to correct, that was the first time, right? 15th of October 2024, the NAV was in fact 49.50. So from that point onwards, the correction is even sharper here. Okay, now is this a bad mutual fund? What is causing this fall? Let's understand that very holistically. So if I go to the returns section, what we note here is that let's look at the long-term returns first. So returns over the years since inception. So the fund started in 2018, right? How much of annual returns the fund has given? 20.85% annually. What is the benchmark return, which is a small cap 250? 17.58%. So although this fund is down by almost 21% in the last 1 year from the 52-week high, still, if you look at the last 7 years or 8 years, whichever is the number from 2018 to 2020-26, the fund has outperformed the benchmark. Okay. Just because the last 1 year they haven't performed, their last 3 years performance is also dragged down. So last 1 year, of course, I showed you the data. Here they're talking about last 1 year, which is, you know, from point to point, which is if I go back in, if I show you the last 1 year, what do they mean by it? So if I go to last 1 year, they're counting it from here, okay, which is 39.14 to 37.30. But what I want you to focus is from the highest peak, how much it has fallen by. I hope you are clear with this simplest concept. Now coming back to the returns, if you look at last 3 years also, they have underperformed the benchmark. Why? Because last 1 year data is very bad. Okay. But if you look at last 5 years, it has outperformed the benchmark. So is it a good fund or bad fund? Look, if you look at 5-year horizon, if you look at 7 or 8 years horizon, this has comfortably beaten the small cap benchmark. So I think it's a relatively decent mutual fund in my view. Again, not a recommendation here. If you look at the performance of SIPs as well, you will note that last 5 years, last 3 years, last 1 year, it has underperformed the benchmark. Why? Because last 1 year has been really bad, and that is influencing 3 years or 5 years performance. But if you look at the inception, it has outperformed from a SIP's perspective as well. Now the natural question, Rahul, why this mutual fund has fallen so badly? So for this, we are going to look at holding analysis. And if I talk about their top holding as of 31st of January 2026, the number might be slightly out because the February data is coming out. So there might be some changes. But IDFC First Bank, 4.64%. People who follow the stock market or follow me, you would know that I've talked about IDFC's crash because of a fraud that came out in the month of February or early March, right? The IDFC First Bank crashed badly. That could be one of the reasons that it has fallen more than the normal other small cap mutual funds. And that is one obvious reason that I can see here. But more importantly, if you see this fund, okay, if you look at the allocations, their small cap is 91.84%. So it is true to the label. It's not that they have got a lot of large caps or mid caps or whatever, right? This is true to the label. Again, I'm not trying to sell you this mutual fund. It's not a promotional video. Nobody has asked me to create, talk about this particular fund, but I'm genuinely sharing the data with you so that you understand what is really going on, right? Two more things I will cover and then move to the mid cap category. One is their Sharpe ratio is bad, 0.53, right? Versus benchmark, which is 0.76. So it's a red flag for now. Okay. But again, this is a short-term performance, Sharpe ratio. I think they are calculating it on a 3-year basis generally. That's what mutual funds do. So last 3 years, not a great performance. But if you look at their portfolio beta here, okay, which is 0.71, it is less than 1. So it's not that it's a highly volatile mutual fund. Even standard deviation is lesser than the benchmark, which is 16.8 versus 19.37. Just because one stock might have crashed, this mutual fund is taking the beating. And also overall, we know the small cap benchmark is down. So coming back to our list, this is the top most fallen mutual fund. Whether to invest in this or not, whether to sell it or buy it, that is absolutely your call, not a recommendation. But I hope you like this simplistic analysis, and if you like that, request you to hit the like button and let me know in the comments. A simple thank you. It motivates me a lot to bring such content to you at zero cost. Also, you can consider joining my YouTube community, which is an exclusive community where I write almost on a daily basis. The feedback of that community has been excellent. With that, let's move to now mid cap category and let's see which is the mutual fund that has been fallen the most so far. In the mid cap category, if you look at my list, you will see that the number one that has fallen the most is Motilal Oswal Midcap Fund Direct Growth. From the 52-week high perspective, it is crashed by almost 18.63%. If I show you the data here, look at the NAV pattern here. This 18% is around here from, if you look at the last 1 year. So let me show you the last 1 year. Okay. Highest NAV was here, 122.51 almost. Okay. From this data point, it has come down to almost 99.69 when I'm recording this video. But more importantly, if I show you the last 3 years, okay, there was a previous peak that this mutual fund made at around here. Okay, have a look at this data here, around 130.66. So from that point onwards, the correction is even more. Okay, so this is the condition with Motilal Oswal Midcap Fund. This fund used to be an excellent fund until this correction hit them very, very hard. Okay, now if you look at their performance, if I come and talk about the regular plan here, I don't have the data for the direct plan. The fact sheet is not yet out. So I'm showing you the data as of February 2026. What you note is that if you look at the last 1 year, 3 year, 5 year, 7 year, 10 year, since inception, in all except the last 5 years. So in the last 5 years, it has outperformed the benchmark 20.75%, while the scheme 22.44. Other than that, if you look at since inception, 10 years, 7 years, 3 years, etc., you will see that this fund is now underperforming the benchmark, right? Why? Because the last 1 year has been extremely bad for this fund. Now, why this fund is all of a sudden underperforming? Let me show you the data. If you look at the sector allocation of this fund as of February 2026, their IT allocation is the highest, 12.3%. Okay. In fact, if you go back to January and December and prior to that, you will find that their IT software allocation may have been even higher than 12.3%. And we know that what's happening to IT companies in the last 6 to 8 months are really bad condition that IT stocks are going on right now. Right. So naturally, this mutual fund is getting beaten down by that. And if you look at the individual holdings here, for example, like company like Persistent, Coforge, right? They still are 6.2, 6.1%. I remember when I was looking at this fund back in December, they used to be around 9%, 10%. So feels like they might have cut these positions, but still they hold significant position when it comes to IT. And if you see the kind of stocks they have been holding, for example, Zomato that have been falling, right? Paytm have been falling recently. These are some of the reasons that the fund is struggling right now. But if you ask me that is this a bad fund? I don't think it's a bad fund. Right now they are getting down because of the IT. If the IT comes back on track, then you never know, right? Again, not a recommendation that you go and invest in this fund, but Motilal Oswal Midcap Fund right now struggling big time. The beta is also very high, okay, 1.0, so they're quite volatile. The standard deviation is on the higher side, 18.5%. Sharpe ratio is good, 1.2. I like that about this particular fund, but overall it's a decent size fund, 34,000 crores of AUM as of now, right? So that's on the mid cap funds. After Motilal, you can see Quant, Taurus, Helios, etc. These are the mutual funds that have fallen more as compared to the benchmark or the last 52 weeks if you compare, right? Let me now move to large cap category and see which mutual fund has fallen the most there. Third is large cap category. In the large cap category, the most fallen mutual fund from 52 week highest NAV is Samco large cap fund. Okay, it's down by almost 11.23%, much lower than mid cap and small cap. But we all know that, large cap has not fallen in general, the indices. If you look at, for example, Nifty 50 or Nifty 100, they haven't fallen that much as compared to mid cap and small cap. Small cap is the worst affected as of now. But coming to Samco large cap fund here, if you look at when did this fund actually start? This fund started very, very recently, 25th March 2025, not even completed 2-3 years, right? Therefore, I wouldn't even look at it. But if I show you their benchmark performance, you will look that from a benchmark perspective, they haven't really done well at all, right? Last 6 months, bad performance versus benchmark 7.73%, they have done 1.68%. Since inception, also very, very bad performance. It's a recently introduced fund. And of course, we know that because the fund started only in the March 2025 onwards, the market has not been great. So, one could argue that this fund people shouldn't even consider because this doesn't have any 3 years or 5 years of tracking history. So from a large cap perspective, Samco, then Motilal Oswal again, LIC mutual fund, UTI, ITI, Quant. These are some of the mutual funds that have fallen more in terms of, if you look at the list here. But I wouldn't worry too much about large cap categories. If you want to invest in large cap category, start considering broader indices like Nifty 50 or Nifty 100. In fact, let me show you the least fallen mutual funds in this market environment. And if I talk about large cap mutual funds, it is Bajaj Finserv large cap mutual fund. Okay, but it was introduced only in 2024. So very, very recent mutual fund. Bank of India started 2021, right? Baroda BN Paribas has done well. It's a relatively older fund, 2013 started. It's only down by 4.74%. But again, one fall cannot really tell you whether that fund is good or not. You will have to do that analysis of looking at the rolling returns. But if you ask me right now, the most fallen one, that comes to be Samco. But as you know, Samco recently started, so I wouldn't really bet on that. Second one comes is Motilal and the third one comes is LIC. With that, let me move to the next category, which is the Flexi Cap category. So in the Flexi Cap category, the most fallen again is Motilal Oswal, right? Please understand one thing, that when an AMC has multiple schemes, right? Generally, when they buy a stock, they might be buying it in different schemes. For example, if I talk about the Flexi Cap schemes here, okay, this is Flexi Cap scheme of Motilal Oswal, you will again see very interesting pattern that, of course, their highest allocation is to banks, 19.9%, but they still have IT as 11.9%. And if you see the kind of stocks they have from IT, you will see Persistent System Limited is here, Coforge is here. So because they are buying Coforge and Persistent as an example here, that they're buying in not only in their Flexi Cap, they're also buying it in the mid cap category. So overall, if you see, the Flexi Cap is also dragged down, right? So from a Flexi Cap perspective, Motilal, UTI, Samco, DSP, these are the bad performing mutual funds as of now. If I talk about the good ones, so if I go to the next page here, you will see, for example, HDFC and Parag Parikh, they haven't really fallen down a lot, 5.28%, 5.25%, right? That is much better picture than something like 11% or 12%. And we all know that when it comes to Flexi Cap mutual funds, there is no comparison of these top two mutual funds, HDFC and Parag Parikh. In fact, I created a separate video on this. I talked about both these mutual funds and I sort of gave you insights about which mutual fund is better for which type of investor. If you haven't watched that video, I would highly request you to go and watch that video. You're going to learn about Flexi Cap mutual funds a lot, right? So these are the broad categories. I've covered large cap, mid cap, small cap, and Flexi Cap. Let me now speak about few sectoral or thematic mutual funds. These are extremely risky mutual funds, and that risk is right now exactly playing out. That's why I keep telling people that if you ever want to invest in sectoral or thematic mutual funds, please do not have a lot of allocation to these funds, because if you don't understand when to enter and exit these mutual funds, they could be very, very risky. Example now, Quant Tech Fund Direct Growth. Okay, this is a IT driven mutual fund, and if you see how badly this has fallen, okay, so if I show you here, let me actually show you the data here. So this Quant mutual fund has fallen by almost 32.24% from its 52-week high, which is the data here that you can see, okay, around 14.29. It is now down to almost 9.11. okay, very, very bad performance. Why? Of course, you know that this fund includes all the IT companies like Blackbox, TCS. There is a banking company as well, ICICI, Intellect Design, a lot of IT companies, Tech Mahindra, Newgen. Oracle, Wipro, all of these companies we know have been falling left, right, center. That's why this fund is very, very down. Now, if the IT comes back, this fund is likely to do better. If the IT does not come back, does not recover from here, then this fund might continue to be a drag down. So this is one thematic fund that has done exceptionally bad right now. Another one that I want you to be aware of is the Tata Nifty Realty Index. So Realty Index, which is the real estate sector, has been down a lot. Right here also, if I talk about the data, extremely bad performance here. So here is Tata Nifty Realty Index Fund. It has fallen by almost 28.62% from its peak. Okay, if I talk about the data here, right, come back here and let's look at the companies that they have. DLF, Phoenix Mills, Lodha, Prestige, Godrej, Oberoi, all of these are real estate companies. The real estate sector is extremely down right now. Now, whether the real estate companies can recover from here on, I can't really say, but right now it is down a lot. Another one that I want you to be aware of is Kotak Nifty India Tourism Index Fund. Okay, if you look at the tourism sector, there is a lot of pressure on that. Again, you can calculate how much it is down by. Almost, let's say the highest was here 10.29 or 10.19, and it is down by almost 7.92, right? A lot of damage has been done here already. If you look at the likes of Indian Hotel Company Limited, GMR Airport is there, Indigo is there, Jubilant Food Works, which is not a hotel company, but okay. IRCTC is also there, ITC Hotel, Lemon Tree, EIH, all of these hotels company, and a lot of pressure on hotel sector right now. Now, if you believe in hotel sector, if you've done some research, then you might go and explore these funds. So overall, these are the mutual funds that have been crashing like anything. Now, let me know in the comments, out of these mutual funds, which you think is a good mutual fund, which is just going through a painful period right now. Let me know in the comments. If you hold any of these mutual funds, let me know in the comments as well. Let's engage with each other and let's see what sort of mutual funds you hold, which mutual funds in your portfolios are down. Let's talk about why these mutual funds are down. Let's go and look at their portfolios so that we understand when the markets are falling, which mutual funds fall more. And these insights helps us learn more and more everyday basis so that at least next time we don't repeat our mistakes. The intention is that we are learning continuously and not just blindly doing SIPs. We are looking at all of this data and to make sure that we are an informed investor. Hope you enjoyed this video. If you did, press the like button. Let me know in the comments. Simple. Thank you. And if you have not yet subscribed to my channel, what are you doing? Hit that subscribe button now. I'm going to see you in my next video. Until then, keep rocking.